And welcome everybody. Thanks for joining us today. Got a brief, but I think you'll enjoy this presentation. I'm going to spend a very small amount of time on my PowerPoint slides. I've got about a dozen or so slides for you today, and then the rest of the time will be spent on my charting platform, actually showing you the setup. Okay. A bit about us here at Trading Winds before we get into the presentation. We are a group of pro traders with well over 30 years of experience. We're real traders and real teachers, and we've been developing our own strategies and trading systems for many, many years and teaching people around the globe from complete beginners to experts. Now, today I'm going to share with you the same money management rules that myself and the other traders here at Trading Winds use on a regular basis. I'm also going to tell you exactly what you're going to need to trade this system. I'm going to show you the setup, the trade setup. Okay, and then once we do that, we get to this part of the presentation, I'm going to ask you to type in a symbol, any of your favorite symbols that you like to trade. It could be something you're in a trade in right now or something you're thinking of trading. I'll bring up my live charts and we can analyze that security together and show you how this system would have worked for that symbol. And then, time permitting, we'll answer all your questions at the end. Just so I know who my audience is today, and that way I can tailor my examples to you specifically, a couple of poll questions for you. Number one, which market do you trade most? Is it stocks, options, futures, or Forex? If you can just take a second and type that into your chat box, I'd really appreciate it. Excellent. Thank you so much. Wow, many options. Traders. Okay, excellent. I promise I'll show you several examples of each. And one last poll question. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you very active, 51 to 100, 100 plus? Please type that in. Okay, that's great. Thank you so much. All right, let's carry on. So, a bit of the legal stuff first. As always, please do not trade with money you can't afford to lose. Trading can be very, very risky if you don't know what you're doing. So please educate yourself first before trading with real money. Okay? Now, speaking of money, our money management rules. As I just mentioned, do not trade with money you can't afford to lose. I'm sure you've heard this a million times, but it is worth repeating. It is very, very important. And really, it's all about how much you trade with. You should always trade with an amount small enough that it feels completely insignificant to you. Trading is so much more about how you manage a trade once you're in it than it is about selecting an entry on a trade. Okay, so for some of you, the amount will be a few $100s, others several thousand. The amount actually doesn't matter as long as it feels insignificant to you. Also, never risk more than 5% of your account balance in any one trade. If you use this rule, you will be reducing your risk significantly. Also, never have more than 50% of your account balance active at any one time in the market. Now, many of you might be thinking, why would I leave half my account just sitting there doing nothing or earning nothing? Well, there's two reasons. One, there are so many factors that are completely out of our control when it comes to the markets. And so we do this to reduce our risk, because any major news event or catastrophic event can really drive the markets against us quickly. And if it happens overnight, we have no control over it at all. So number one, it's meant to reduce your risk. And number two, should such a loss occur, you then have money in your account to continue trading and make back that loss. And with this, the trade setup I'm going to show you today, you'll be able to make that back fairly quickly. Also, never place more than 2 trades per day. Now, most of the examples I'm going to show you today are on daily charts, but this doesn't work on any time frame. But if you trade on a daily basis, what I want you to do is just select the best of the best trades. You might have 4, 5, 6 setups in any given night, but you should always select 1 or 2 of the strongest trades. The reason being, as we've seen most recently, there's been increased volatility in the market. So we could see a day where the Dow Jones is up 300 points, the S&P is up 25, NASDAQ's up 50, etc. On a night like that, you're going to get several setups in the one direction. If you jump in and put on 10 trades at a time, and then the next day the market retraces, you're going to find yourself in a big hole right off the bat. And that's what you want to avoid. That's why you want to be selective and spread your trades out. A few other rules or goals we have here is, there's one saying in particular that I want you to walk away with, and that is, you will never go broke taking profits, okay? Especially if you're just starting out. You know, as you get more and more experience with your trading, you'll be able to stay in a trade longer and squeeze out every bit of profit you can. But especially at the beginning, when you have a profit, take it. Also, trading is not about whether you're right or wrong. That's important. But it's how much money you make when you're right versus how much money you make when you lose, or how much money you lose when you're wrong. That really matters. Okay? So what will you need to trade this system? First of all, you can use just about any charting platform, free or paid. There are only 3 indicators you're going to be plotting on your chart. One is the 20-period simple moving average, which I've yet to see a charting platform that does not have that. The other is the Ichimoku Kinkin-Hoi indicator. Now, we're going to use a stripped-down version of it. We're not going to use the full version. I'll explain in a moment. And the other is the relative strength index, or the RSI indicator. Okay, and again, most are now available they're available on most charting platforms. So there is no need to go out and spend money on new hardware or some complicated charting software. If you're watching this webinar, you already have everything you need. A few of the benefits of this system. Number one, it will work on any market, and I'll show you several examples of each. Stocks, futures, Forex, okay, globally, any time frame and any price level. Okay? And you don't need a lot of experience to trade this. Okay? It is very, very simple to spot on a chart, and it has very clear entry and exit rules. Okay? It has extremely low risk. You'll understand when I show you. And most importantly, it is consistently profitable. Okay? We've been using this for many, many years. So the strategy is comprised of 3 things, as I mentioned. The 20-period simple moving average, a stripped-down version of the Ichimoku Kinkin-Hoi indicator, and the RSI. Okay? So let me switch over to my live charts, and let me show you the setup. Okay? So hopefully everyone can see my charts now. Let me just take a sip of my coffee. Okay, so whenever we actually let me talk about the indicators first. This blue line here, this is the 20-period simple moving average which I have on, and these are the clouds. This is the Ichimoku Kinkin-Hoi cloud. Now I'm going to actually show you what it looks like, what the full indicator looks like. Okay, so you'll understand why we use a stripped-down version. Okay, if you use the default settings, okay, it would look something like this. Okay, all these lines. Now, this is an indicator that's been used over in Asia for many, many years, very successfully. It's actually a very powerful indicator that can be used as a trading strategy on its own. Okay, and it is very consistent as well. These are different moving averages. Now, they're calculated slightly different, but they're used for support, resistance, and to identify trend and entries and exits. Okay, there are many rules wrapped around this indicator, but all we want to use it for is to identify trend, and we prefer to have a very clean chart layout. So that is why I do use the default settings, but I do remove most of the lines here and only keep the cloud portion of the indicator on. Okay. And so, as you can see, it's much cleaner, much easier to see, and much easier to read. Okay? But really, the whole purpose for this is to identify trend. And the way we do so is when the bars, the price bars, or candles, okay, and the moving average, excuse me, are above the cloud, that means we're in an uptrend. If they are, if both the moving average and price action is below the cloud, then we are in the downtrend, okay? It's as easy as that. So in a split second, when you pull up a chart, you can tell exactly where you're at. And if the price action and the moving average are within the cloud, then that is a consolidation phase which we do not trade, okay? Lastly, we have the RSI indicator here. Now, the default on most charting platforms on the RSI is 14, a period of 14. We cut that in half. We move that to 7 because we want a much more responsive RSI. The other thing about the RSI is that most people would use it to identify extreme areas of overbought and oversold conditions. And they do so by plotting the 80-20 lines on here, or even 70-30. We don't do that. We remove those and we plot one line down the middle at the 50 level, okay? So the RSI settings are setting of 7, and then we plot a line down the middle at the 50 level, okay? Those are the indicators. Now, when we first pull up a chart, there's a couple things we look for. Number one is to identify trend, and I just explained that, quick and easy to spot. The other thing we look for is momentum, okay? And the way we read momentum is by the slope in the candles, okay, or by using the 20-period moving average. So for a long trade, you can have slight momentum in your favor, you can have more significant momentum, or you can have very significant momentum. The higher the slope of the bars, okay, or that moving average, the higher or the more significant that slope, the better. And the same thing goes in a downtrend, okay? The more significant that slope of the price bars or the moving average, the better. And that's how we identify momentum, okay? When you see that, it's like having a wind at your back. It propels you forward, and that's what's going to tell you how strong this trade is going to be. So having said that, let's review the rules, our entry rules for a proper setup. So we pull up a chart. This is a chart of Nike, and the first thing we're going to look for is trend and momentum, okay? So we spot this area here, and we see we clearly have the candles in the moving average above the cloud, so we know we're in an uptrend. So now we're looking for momentum. We get to this period here where we do have a nice clear slope to the upside, okay? Now this was due to a pop on earnings, but regardless, we have that momentum in our favor. We then get a pullback here, and I should say, once we know what our trend is and we realize that we have momentum in our favor, we then switch our focus to the RSI. And for a long trade, what we're looking for is that the RSI line dips below the 50 and then back above. And it doesn't even have to dip below. It can just come back and touch it, okay? And just come back and kiss it and bounce. But it needs to come back to that 50 and then cross back above. And it is that bar that it crosses back above that is our setup bar. So in this instance here, okay, let me mark that. It is this bar there, this green bar there. There's your dip below and a move above, okay? Now, that is the setup. The trigger to get in the trade would be a trade just above the high of that candle, okay? So one tick above the high of the setup bar would be your trigger in, okay? Your stop loss would go just below the most recent low, okay? And then it's just a matter of managing that trade. But you can see what a powerful move results. And that is because of that momentum that we have in place, okay? Now, once you enter the trade, you forget about the RSI. You no longer look at the RSI. So it doesn't matter whether the RSI dips back below or what it does, okay? Your focus is strictly on managing that trade, and I'll talk a bit more about exits later on. Let's look at another example. Here's Baidu, okay? Baidu, here the candles were below the cloud, then we get a cross above, okay? along with that moving average. Now we know we're in an uptrend. Regardless of the color of the cloud, even though it was still pink here, it doesn't matter. The point is price action and moving average are above. That tells us we are in an uptrend. Now, we clearly have momentum in place. Oops, sorry, wrong. Okay, there's my trend line. And the other thing I want to tell you that you should look out for is that when you cross from one side of the cloud to the other with a significant slope, okay, with momentum, that usually tells you that this move is going to be sustained, okay, and it's going to carry on for a while. So that is a heads up that this is going to be a powerful move. So once we know we're in an uptrend and we know we have momentum, we switch our focus down to the RSI and we wait for this move back to the 50 or just below it, and then the move back above for the setup. Now, in this instance, you can see that the RSI dips below, it dips back above, and then does another little dip and back down. And this is a formation you want to make a note of. This little W formation, or a double dip as I like to call it, is very, very powerful. It usually results in a much stronger move. Okay, oops, let me mark this. So the first one was on this candle, and the next one was 2 candles over. Okay, so the first one was there, and then there. Now, this is the reason why when you first get that initial setup, okay, if you get a trigger into the trade, you want to put your stop just below the most recent low. You want to give yourself a bit of a buffer there, because it might do that double dip. But if it does, you don't worry about it. You're actually get excited about it because you know this is going to be a much more powerful move, and you can see just how strong of a move resulted from that. Okay, and it works exactly the same way to the downside, except it would look like the letter M instead of W. Now let me show you an example of a short trade. Here we have price bars and the moving average below the cloud, so we're clearly in a downtrend. We then start looking for that slope lower in the 20-period moving average to tell us we have momentum in place, which we do right here. So then once we have this, we switch our focus to the RSI, and we wait for a period where the RSI either comes back to touch the 50 or moves slightly above it, and then crosses back below. So right here on this candle is our setup. Now for a short trade, your trigger into the trade would be a trade just below the low of that setup candle, okay? And then if you get that trade just below the low, you enter short, and your stop goes just above the most recent high, okay? And then it becomes a matter of managing that trade. And again, you can see what a nice move resulted here. Now, one thing I haven't mentioned yet that I should is that in this case, you're looking for a trade just below the low of that candle. Should it trade above the high of that candle first, the trade would be negated, okay, or disqualified. And it works the same way for a long trade, okay? For a long trade, you're looking for a trade just above the high of the setup candle to get you in. But if it trades below the low first, then it's disqualified, okay? And that rule alone will eliminate most of your losing trades, okay? Because should it trade on the opposite side of that candle, really what it's telling you is that the momentum is not as strong as you first thought, okay? The other thing you should look for is that if it doesn't break the low of this candle within the next 2 candles, even though it doesn't trade above the high, if it just consolidates sideways and doesn't break the low within the next 2 candles, then again, the trade should be negated, okay, or disqualified, because the momentum just isn't strong enough. Okay, you want that move to happen right away, and typically, this is what is the end result. So, what happens on most trades that trigger is that it tends to move in your favor immediately. And I noticed when I asked the poll question, most of you on here trade options, and you know how important it is for a trade to go your way immediately with options, because if it doesn't, and goes against you, then to make up that loss in premium, it's going to require an even stronger move in your direction to recover that premium and then make you a profit. But if it moves in your direction right away, then you're in profit right away, and it's very powerful. Okay, let's look at Apple. I know Apple's a favorite of many traders. Again, a very clean chart, very simple and easy to read. You have this period of consolidation here where the candles and the moving average are overlapping the clouds. It then breaks away. Okay, this is on earnings, gaps up. So now we have candles and the moving average above the cloud, clearly in an uptrend. We then look for momentum. Okay, how do we judge momentum? By the slope. We clearly have the slope in place. So now we focus our attention on the RSI, and we just sit and wait until we get that pullback, either to or just below that 50, and then that cross back above. Now, what's crucial here is that when that cross happens again, when you do get that setup, you must have the momentum or that slope still in place. Okay, if the moving average here had flattened out, then it would no longer be a candidate. Okay, but because that slope remains in place, then you want to take that trade. Okay, now you can see here this one here went against us. Okay, but it did not dip just far enough, because our stop loss goes just below the most recent low. That's why you want this buffer. And you can see here it then crossed, and then we had the move higher. All right. Even though most trades will move in your favor immediately, but you will get the odd one that goes against you slightly, and especially those the W patterns, like here, the double dip. Okay. But again, those are really the ones that usually work out the best and that you wanna look for. Here's Goldman Sachs, same thing. A nice clean chart, move with momentum from below the cloud to above. It moves with momentum. You know there's going to be a sustained move here. Okay, so you wait, you look for that period with a nice slope in your favor. You then wait for a dip. You get here. Here's the cross back above, and there's your entry. There's your setup bar. Wait for a trade just above there. That's your entry. Your stop goes just below the most recent low. In this case, happens to be only 2 candles back, right down here. But look at what results, right? A nice strong move here from the 172 level, up as high as the 188 level, with really no no pressure to the downside at all. So how are we doing on time here? Let me just double check. Okay, we're doing okay. So here's a few more examples, stocks, and then I'll get to the futures and Forex for everyone who prefers to trade that. So again, here's another clear example on VPT. That move from below the cloud to above happens with momentum. We then know that there's going to be a sustained move. Okay, and typically on a sustained move, you will get multiple entries along the way. So even if you miss the first one, okay, as long as that momentum is still intact, you will have other opportunities to enter. Okay, and you can see here, once we had that momentum, we switch our focus to the RSI, and we wait for that little dip and that move back above. And there was one here. Okay, here's what I'm talking about. When it just comes back and kisses the 50 line, right? It just touches it and bounces back. So you could have entered at this point. Oops, let me mark that. Okay, at this point. All right. Now remember, you do need a trade above the high of that setup bar to actually get you in. All right. Then there was another dip here. But any of these, if you go back and you analyze any of these, and you consider that your stop goes just below the most recent low, you can see here that you would have never been stopped out along here. Each one of these trades, no matter where you got in here, would have been a winner. Okay, and here's another really nice one right here. Okay, so your risk is minimized because your stop loss is very tight in most cases. And if you get one where the most recent low is far away, well then just skip that trade. You can have many setups for this to choose from. So be selective, be picky, pick the best of the best. You see, here then we get another move from above the cloud to below, okay, here. And again, it happens with significant slope. Here was your first heads up, a really strong momentum lower going from one side to the other. So you knew that a sustained down move was about to happen. This one actually tries to recover, comes back into the cloud, but just can't hold that move to the upside and fails. And again, it fails with momentum through that cloud. Okay, so once we have that momentum in place, we know we're in a downtrend. We're only looking for short trades. We focus our attention on the RSI and just wait for that move above and then back below. And again, here, if I mark them, you can see there's plenty of opportunity to get in all along the way. And here's that little W pattern that I was referring to, the opposite of the the M pattern, the opposite to the W pattern right here. Okay, now this one, see here how the moving average has actually started to move higher. Okay, so even though this would have been a powerful trade, okay, and a very nice winning trade, you should not have entered this one. Okay, this one, because you've lost momentum. Once you start regaining momentum, you get another opportunity right over here. Okay, let me mark it for you as well. So, you know, you gave up, oops, sorry, not that, right there. So you gave a part of that move, but you would have gotten most of it, and it was significant as well. So, very nice move. Now, let me show you how this works on futures and Forex. Okay, futures. Here's a chart of light sweet crude, which if you've been following the markets at all, you know exactly just how devastating this drop has been. But let's analyze the clues using this chart setup and see if there were any. Here's the first one. You're going from above the cloud to below with momentum, right? It's sloping through. So the price bars come below, they actually retest the cloud and fail. So theirs was your first heads up right at the beginning of that move that we were in for a sustained downtrend in crude. Okay? So what do we look for now that we know we have a downtrend and we have that slope in place? We focus our attention on the RSI, right? And we wait for that dip above and back below. And there are multiple opportunities to enter here, all of which would have been winning trades. Okay? There you go. And you would still be in this trade, believe it or not, with the exit strategy that we use. You'd still be in this trade, okay? Which is enormous. From roughly the $92, $93 level, it's now at, you know, it got as low as $46.83. You cut in half, and you'd still be in this trade. The euro. Let's look at the euro. I know many people like to trade the euro. Exact same thing. Pretty much same picture as crude. You see a nice move from above the cloud to below with momentum. That tells you that it's going to be a downtrend for a while. Okay, and so we start looking for these periods of momentum, and that's when we focus our attention on the RSI. So the first one here, if you had caught it, would have been right here, right? And now this one dipped a little, okay, moved higher, but see, where would your stop have been? Above the most recent high here, which was actually back up here. Now, if this was too much risk for you, then you would skip the trade and wait for another opportunity, okay? If you had taken it, you would not have been stopped out or work, but chances are it's way too much risk, so we skip that one. Then we go flat, so we stay out of the market. Once we regain momentum to the downside, we focus our attention again on the RSI, and here's our next opportunity. And this one just collapses, works out really well. And then you get a bunch more in here and in here, all of which again would have been winning trades. Let's look at just a couple quick Forex examples. Here's the Aussie CAD, Australian Canadian dollar pair. Whether you're trading stocks, futures, Forex, it really doesn't matter. Nothing changes. Okay, the settings, indicators all remain the same. It's just plain technical analysis. Okay, that's what drives this. So here you have a really strong move from below the cloud to above with momentum on the Aussie CAD. You're now in an uptrend with momentum. You focus your attention on the RSI and you wait for that double dip. There's that little W pattern. Okay, you get in and off it goes. All right, same thing to the downside. Here's the most recent one here. Okay, so you can see it works across the board. Here's EuroCAD, same thing. Once you're below the cloud with the candles and the moving average, you know you're in a downtrend. You have momentum, focus your attention on the RSI, and there's another really nice winning trade to the downside. Okay? So now I can see there's a number of questions, and I'm actually going to bring our coaching coordinator on, Raul, to help me read through a few. And now is the time where, if you want me to bring up a symbol and show you how it would have worked with the system, now's the time to put that into your chat box. And we'll try to do a few because I know we're a little tight on time here. Raul?
How are you?
Great, thanks.
Thanks for having me here. Always enjoy spending my Saturday afternoons with you.
Excellent.
Let's start with Shabir, who wants to know about SPX.
SPX. Excellent. Again, very simple. As soon as you bring up a chart, what do you see? You can tell whether you're above the cloud, below the cloud, or in the cloud. So you know whether you're an uptrend, downtrend, or a consolidation phase, right? Then you look for that slope, and then you look for those pullbacks. And see, the candles here, it doesn't matter whether they get close to the 20 or on the 20 or beyond the 20. It doesn't matter. What matters is that when you get that move by the RSI back to the 50 and then the move back above, what matters is that the slope in the 20 remains the same, okay? Because if the pullback is too far, if it comes back way too far, then the moving average is going to start flattening out and rolling over. And that's when you know you've lost momentum and you want to give up on it. Here's an example of it there, okay? So now with the S&P, so you can see there were a number of trades in here, okay? Most recently we had all this volatility, okay? And this is another nice part of this. Because of that, when you get these huge moves like this, okay, no, you're not going to participate in these moves, but what we're looking for are the safe plays. That's all we want. We want the sure thing. So now we have to wait here on the SPX for the 20 to show us that we have momentum to the upside. Here it looks like it's retested the cloud twice and is holding. But there is no momentum. The moving average is flat. So we have to wait for momentum. Then we focus our attention on the RSI and wait for a proper setup. Okay?
Ken wants to know about LinkedIn.
Sure, LinkedIn.
This is one of the stocks that you've had in the past.
Yeah, several times. And here's a nice example to the downside. When this was earlier in the year, last year, clearly in a downtrend. Really strong momentum here to the downside, almost a vertical moving average. And so we wait for that pullback. And there's our setup right there, right? We wait for just a trade just below that. And within like 3 days, we move, let's see, the low of that bar was 166. And within 2 days to 143, from 166 to 143. Now, I'm not saying you're going to catch the exact bottom. No one knows where that's going to be. But we will, there are ways where you can stay in the trade and capture most of those gains.
Julia wants to know about JPM. I haven't heard people ask about JPM in probably months.
Yeah, well, mainly because if you look at this chart and you see
This is the first thing you say when you look at a chart.
Yeah, I'm very conservative, and I like a clean-looking chart, one that has an obvious trend. This one, you can see how choppy it is back and forth. It looks messy, right? So, I mean, I'll come back to this in a second, but I want to show you the difference. Look at JPM, and then look at a chart like Southwest Airlines, for example. Look at the difference. Can you read this clearly? Do you know where this is headed next? Yes, very simple. You look at JPM, and it looks like a complete mess. If I challenged you and said, where do you think it's going next, you'd have to guess, because that's all you can do is guess. So, you know, are there trades that we could find in here? Yeah, there was one right in here, okay? You're above the cloud. You have nice, strong momentum to the upside. You get this pullback on the RSI, and right there is your setup bar. The very next day, it trades above the high, and it moves from the 59.5 level, let's say, up as high as, you know, 61.5, right? Very quickly. So you can find trades on a stock like this, but I prefer to trade on a much cleaner chart. But as of now, JPM is within the cloud, so there's nothing to do here but wait for it to move on one side or the other and then show you momentum.
We'll do one more, and then I'll let you get back to your presentation.
Fine, yep.
Maureen, Henry, and Trent all want to know about Apple.
Apple, okay. As I showed in one of the examples earlier, Apple had several areas. Now, see here, this is a good example. You see how it started going flat there? Okay. So you want to wait, right? And you want to wait for that momentum and then an entry, a better entry there. But Apple right now, you can see, is in the cloud. Okay. Looks like it wants to come out, but we have momentum to the downside right now. If this continues through this cloud with momentum like this, then you know we're going to be in a downtrend for a while on Apple. And that's when you're going to focus your attention on the RSI and looking for new trade setups, okay? So I will try to answer as many of your questions as I can. Just let me go back to my presentation just for a quick second and recap what we've covered so far. And then I promise I'll answer some of your questions or even stay behind to go through more examples, okay? So what I've shown you today is a system that will work on any market, stock, option, futures, Forex, globally, any time frame, any price level. You saw how easy it is to spot the trade setup on a chart. It is powerful enough to be used as a strategy on its own, completely. Or it can be a very good complement to whatever you're trading with now. As you saw, most trades that trigger tend to move in your favor immediately. And a real benefit is that majority of trades that don't work out are actually not losers. They're just negated trades, okay? So I see many questions, and especially on the exits. I'd love to answer everything for you, but I just don't have the time. We do have a class, though, coming up Friday, January 30th at 1 p.m. Eastern Standard Time. It's a 2-hour class. I will be teaching this class. And what I'm going to teach in this class is the full system. What I've given you is the basics of this strategy, okay? I'm going to teach you the full strategy from start to finish, entry to exit, and I'm actually going to cover 5 different exit strategies that you can use, but I will focus on the one main one that myself and the other traders here have been using for many years. I'm also going to tell you how to trade this strategy with options. In other words, when would you buy a call or a put versus put it on a credit spread? I'm going to talk about the deltas you should be looking for, what kind of expiry date you should be looking for on the options, all of that. I'll tell you exactly how we trade this with options. And a real benefit of this class is that we are going to do a full scan for real-time trade setting up together. I'm going to share with you my watch list. I'm going to show you exactly how I scan for trades every day, and we're going to do it together. And so hopefully we'll walk away from that class with several trades to put on for that coming week. And as a bonus, because that Ichimoku Kinkenhoi indicator is so powerful, I'm going to also include a course that we normally teach on this that's strictly on the indicator, the full indicator, how to use it as a strategy on its own. And I will cover that in the course as well. Okay, the link to sign up is tradingwins.com/invest. Now, this is what you're going to get as soon as you sign up. You don't have to wait till the 30th of January to take advantage of this, because as soon as you sign up, half an hour after you sign up, you're going to get a recording of the previous class we did, which is just, I don't know, a couple weeks ago, just before Christmas. And so you can watch that recording and start trading with this right away. Now, even though you get this, we're still going to save you a live seat at the class. That way you can watch that recording, make a note of any questions you have, and come to the class prepared with your questions. And as a bonus, we're going to throw in a 30-day membership to our pro service here at Trading Wins. Now, what we do from Sunday to Thursday, we send out videos every evening recapping what the markets did that day, where we think they're going. We cover a number of other technical analysis tidbits in there, and we review our open positions, and we highlight new trades setting up. And the trades we highlight are not just with this system. We have several systems that we use at Trading Wins, some of which have never been released to the public. But any new trades that come up in any of those, we will highlight in our videos. You'll have the benefit of that. And also, any trades that myself or the other traders here put on, any trades we actually do, we will send you trade alerts on via email. So you'll get an email when we first open the trade, and you'll get an email when we close the trade, okay, with full details. So all of this, $988 value, but for anyone on the webinar today, all we're asking for is $97. We really like you to try our service. We think you'll really enjoy it. Now, unfortunately, we do have to limit the number of people in this class. There's only room for 25, and the reason being is the goal for this class is to teach you the full system and answer all your questions so that you're able to walk away from that class trading this like a pro. Okay? And if we open it up to more than 25 people, we found in the past that we just cannot get to everyone's question. In the recording you'll receive, I think it's actually close to a 3-hour class rather than 2-hour class. We had to stay back to answer more and more questions, and that was with 25 people. So we do unfortunately have to restrict the number. Now, again, to recap, I'm going to cover the full system, entry to exit, tell you how we trade this with options. We're going to do a scan together, show you exactly how I do that so we can all walk away with some trades, and I'm going to teach you the full Ichimoku Kinkin-Hoi indicator, okay? Again, it's tradingwins.com/invest. Now, if we have time, we can answer a few more questions.
There are so many questions that I could probably keep you here for the next 3 hours, but I know that's not a possibility, is it?
No, it's not.
Can we do the pro class right now?
Exactly, we just do the pro class right now.
All right, let me start from the beginning. For the people that asked all these questions earlier, where I said Vince will address these questions in a little bit. When talking about previous lows and highs, are you referring to the closing price? That's from Todd.
Yes, I am. I'm talking about the closing price, absolutely.
What does the cloud tell you that you are not already getting from the green line?
From you mean the moving average?
I'm assuming that's...
Yeah, if you come to the class, you'll understand how powerful the Ichimoku Kinkin-Hoi indicator is in predicting the trend, and that's why we prefer to use the clouds. It is just extremely accurate from a trend perspective, so that's why we use the cloud.
Must it come back to the 50 or a window around the 50, say 55 or below? That's from Steve.
No, it has to come back at 50 at a minimum. Okay, it can go below as long as that slope in the moving average remains intact. But it cannot be at anything higher than 50.
I know that discipline is a very big part of this system.
It absolutely is.
You always tell me this. What separates a successful trader from one that isn't?
One that follows the rules to a T. Absolutely. See, we developed this many, many years ago, okay, and we've tweaked it many times. But for many years now, it's remained exactly the same. But how we arrived at these rules was by trading it and testing it over and over again. So the rules I'm giving you and what I'm going to tell you in the class, how I'm going to show you to trade this with and without options is the way you need to trade it. If you deviate from that, then your accuracy is not going to be the same.
Price and average both need to be above or below? That's what Steve is asking.
Well, for a long trade, they need to be above the cloud. For a short trade, they need to be below the cloud.
The settings that you're using for the cloud, standard settings on TOS?
Yes, for the Ichimoku Cloud, the settings are the default settings. What I'm doing is removing the trigger, the base, and the lagging line from that. But I'll show you how to do that in the class as well.
You know, we've had people in the past who came to one of these free classes. You've given them enough that they can use the system.
Yeah, absolutely.
And then they came back a week later to sign up for the pro class.
Yeah, because it makes a big difference, especially the exits. It makes a big difference, and especially if you're an options trader. You know, you want to know when to use which type of option with this and how we do it.
Is it 20 SMA or EMA? I think it's SMA.
It's SMA. Well, again, we've traded in the past with exponential, with weighted moving averages, but what we found is the 20 SMA is the best to use with the system.
People are asking, Jonathan and Carol are both asking, they just signed up, they've got an email to confirm their, they've got a message to confirm their email. What's that all about?
Yes. When you sign up, you are going to receive an email that's asking you to confirm your membership. You need to click on that to confirm your email, because if you don't, you won't receive any of our nightly updates or our trade alerts, nothing like that. Okay, so you must confirm your email. You must click on that. Okay, and it will say, please confirm your email, and it's a highlighted link in your email.
Tom's asking, can you trade this with futures?
Yeah, absolutely. I showed you the crude oil chart and the euro chart, but again, any market, any time frame, it works great.
Sugar, platinum?
It doesn't matter. We've traded them all.
Did you mention what happens after 30 days on the pro service?
No, I didn't. If you're enjoying the pro service, at the end of 30 days, you do nothing, and it will automatically renew at a $97 a month price point. If for whatever reason you'd rather not continue, just give us a call before the 30 days are up, and we'll cancel that for you.
How quickly will they get a recording of the previous session?
In about 30 minutes after you sign up, you will receive the recording of the last class.
I want to thank Margaret. I want to thank Thomas. I want to thank William. I want to thank Dimitri. I want to thank Dominic, all for joining. Really appreciate it. Dimitri's asking, there's an option to buy a day trading crash course. What's that about?
Oh, yeah. I'm not sure. Maybe after the sign up, I think you will get a pop-up for an offer to sign up for our day trading course. It's a different strategy, actually, but it's another one of our strategies that works very, very well. And it's a special offer if you buy after this class for only $27. It's a great class, too.
Phyllis is saying that she's having difficulty placing her order online. Phyllis, if you are, you can always call us at the office, 1-888-574-2426. We'll be putting that in the chat as well. I think Phyllis may have actually knocked over the server because of the number of orders coming in. Phyllis, thank you for that. We do appreciate that. How much of this is from Lena, how much of the discussion during the class on the 30th will be on options?
You know what? It's about 30 minutes, 30 to 40 minutes or so. What I'm going to cover is the basics, meaning I'm going to tell you if you're going to buy a call or a put, you know, what type of expiry, how far out you want to go with the expiry, what kind of delta you want to look for, you know, which specific series you should buy. And also, through examples, I'm going to show you when you might want to buy a call versus selling a credit spread or put spread, that sort of thing. We won't have time to get into the complicated strategies like butterfly spreads and iron condors, etc. But I will certainly give you enough detail for you to walk away and trade this with options.
I'm going to read this comment from Rodney. Rodney, thank you very much for your nice remark. I'll be there on January 30th, and I'll add this cloud setup on a different chart and save it. Every single edge helps. I've seen it in studies, in TOS, but I did not know what it was, and I have been a trader for over 10 years. LOL. Thanks again, Trading Wins, and you rock.
Thank you.
This is not uncommon.
Yeah, no.
You hear this all the time. I think your style is that you're very conservative, and I think a lot of people like that.
I am. I'm very, very risk averse, and actually, if you come to the class, I'll tell you my story of why I became so conservative and why I use strictly technical analysis to trade. Very, very early in my career, I sustained a huge loss, and I'll tell you exactly how and why. And it was due to fundamental.
For
analysis.
folks that understand American metaphors, you got taken out by the woodshed.
Yeah, absolutely. I was, it was fraud, no question. But I'll explain it to you, and it was quite scary. But you know what? I'm glad it happened now because of that. That's how I started with technical analysis and became very, very conservative. And it served me very well over the years.
I see that it's just about 7 minutes past 2 o'clock.
Yep.
Can you hang around for a few more tickers?
Yeah, as long as Reed is okay with it, we can go. We can do a couple more questions.
All right, let's do Amazon.
First, symbols. Let's do Amazon.
That's from Frederica.
Okay.
Again, I know we always talk about this. Are you surprised at how many women join the class?
You know, I tell people all the time when I first started trading, I don't think there was one woman on the floor when I was trading, and then we started getting a couple, but it was very, very rare. Even from a clientele perspective, very few of our clients were women. Now, it's at least 50-50, if not more, which is fantastic.
It is.
Here's Amazon. Okay, again, right here on the top left of the chart, you can see how significant the slope is when it moves from above to below the cloud. Again, this tells you that this downtrend is going to be in place for a while. So Amazon tries to make a comeback, hits that cloud, and fails. Now at this point, we regain the momentum to the downside. So we switch our focus to the RSI, and we wait for that move above and back below. And here we have that M pattern, right? That double dip. Okay, let me highlight it for you right in here. Okay, and you can see what resulted. Okay, now yes, this was on earnings, and I'll also tell you how I deal with earnings at the class. This is exactly the kind of setup that you're looking for. Here's another one a little later. This was in October, November. Okay, you have a nice, strong momentum to the downside, clearly in a downtrend. You just wait for those pullbacks either to the 50 or just above and back below, and there are multiple areas to enter. In here, okay, in here, and you can see what resulted next. Okay, so works really, really well.
RG wants to know about Netflix.
Netflix?
Yeah.
Sure. Let's have a look at Netflix. I think there was a recent one on Netflix. Yeah. So this was the recent one on Netflix here, and you'd still be in this trade. Okay. But again, here's another example in here where you lose momentum. So even though you get a setup, you don't take that because the momentum or that slope in the 20 is no longer in place. So all these rules are meant to eliminate the bad trades, right? Remove the risk. You want the safe, easy play. So even if you see a chart like this, where you see this huge move and there is no entry for you along this way, okay, it doesn't matter. There's many setups out there. You just have to find the one that has all the criteria in place. There was one in this area on Netflix that again worked really well. It may look like, well, only 2 bars lower, but you know, Netflix is a $300 stock, and it went from about the 330 area down to 299.5, right? A $30 move in 2 days, especially if you're an options trader. Who wouldn't want that? Easy money. Are there any others?
A few more. I just want to read something from Leon. Leon says, Vince, I attended Our Favorite Trade setup back in November. I'm looking forward to seeing you on the 30th. Thank you for all your help. During the winning Our Favorite Trade setup session, I was able to take away 3 trades, one on AT&T, one on JP Morgan, and one on Netflix. That more than paid for the class, and I'm still making money from those.
Fantastic. Love to hear that. Thank you so much.
Let's do, if we can do Groupon for Ellie.
Groupon, remind me. Yeah, Groupon. Again, look how easy it is to read, right? Very clean chart. It's very obvious. You get a move from above to below with momentum, right? So your focus should only be on the RSI, waiting for these moves back to the 50. Okay, let me mark them for you. Time level, right in here. Okay. Wait for a trade below the low of that setup bar, and off you go, right? If you miss that trade, you get another opportunity in here. Okay, and these are really nice moves. There's an this, even though it's what is a $7 stock at this point or $8 stock, you get some really nice moves. It doesn't matter again the price level. You've seen the $300 stocks, you've seen the 7. It really doesn't matter. It's very quick and easy to spot on a chart.
Folks, we're getting the message from Reed and the folks that we've got to wrap this up. I know these folks want to get home. I just want to say a big thanks to Reed and the rest of the folks at Investor Inspiration for having us on. We're humbled that we're part of this elite crowd. Thank you for letting us share our knowledge, and hopefully everyone has learned a little bit and made their trading a little bit better. Vince, I'll let you have the last word.
Yeah, first of all, I want to thank everyone for taking time on a Saturday to be with us. Thank you so much, and thanks to Reed and everyone else at Investor Inspiration for having us on again. We love doing these events, and hope you'll have us on in the future. So thank you very much, everyone, and I really hope to see you at the class on the 30th. And with that, Reed, I'll pass it back to you.